Hello, welcome back to Intertax Learning. Today, we're walking through one of the biggest changes in U.S. international tax starting in 2026, the shift from GILTI to NCTI. If you work with U.S. multinationals or you're preparing for the ADIT exam, this change affects how foreign earnings are taxed, how assets are treated, and how much foreign tax credit relief is available. Let's break it down clearly using a very simple structure. We have a U.S. parent company that owns a German subsidiary. The German sub manufactures product and sells them to German customers. Because the U.S. owns more than 50%, the German sub is a controlled foreign corporation, or as we call it, CFC. When the German sub earns profit from these sales, the IRS doesn't want to wait for an actual dividend. Instead, the U.S. parent is taxed on a deemed dividend. Before 2026, that deemed dividend is called GILTI. Starting in 2026, it becomes NCTI, net CFC tested income. GILTI is calculated as net tested income minus 10% of QBI minus certain interest expense. A few quick definitions. Net tested income is the combined tested income of profitable CFC minus the tested loss of loss-making CFCs. We can ignore the multiple CFC situations now, and let's just focus on one CFC, which is our German sub. QBI is the qualified business asset investment, basically the depreciable assets that generate tested income. QBI reduces GILTI, so the more assets you have, the lower your GILTI inclusion. And then, once you compute GILTI, the U.S. gives two major benefits. A 50% deduction, so half GILTI is taxable, and an 80% foreign tax credit based on foreign income tax paid on the tested income. In our case, the foreign income tax would be paid to the German tax authority. So let's look at an example. If German subs tested income is 100 million, QBI is 500 million, foreign income tax paid is 10 million, then our GILTI inclusion is 100 million minus 10% of 500 million. Remember that 100 million is the tested income and the 500 million is QBI. We arrive at 95 million. U.S. companies' taxable GILTI would be 50% of that, which is 47.5 million. The U.S. tax on GILTI would be 47.5 million times the 21% corporate income tax rate, which gives us a 9.98 million. The credible foreign income tax is 10 million times 80%. Because we can't use the full 10 million, we're limited to 80% of that. That's why we can only reduce the 9.9 million of U.S. tax with 8 million of foreign income tax. So now our net GILTI tax is 1.98 million. Beginning in 2026, GILTI is replaced by net CFC tested income. The biggest conceptual shift is this. NCTI does not include a QBI reduction. Assets no longer reduce the deemed dividend. So if your CFC is asset heavy, it does manufacturing, distribution, logistics, the removal of QBI means a higher US inclusion. But that's not the only change. NCTI also comes with a different deduction and a different foreign tax credit percentage. Under NCTI, you get a 40% deduction instead of 50%. You get a 90% foreign tax credit instead of an 80%. Let's run the same example. So the German subs tested income again is 100 million, QBI is 500 million, foreign income tax paid is 10 million. Our inclusion now is just the 100 million. We're not reducing it by 10% of QBI. So our taxable NCTI is 60% of that, which is 60 million. Our income tax on NCTI is 60 million times 21% corporate income tax rate, which gives us 12.6 million. Our creditable foreign income tax is a 90% of the 10 million foreign income tax paid. So our net NCTI tax is now 3.6 million, which is higher than the 1.98 million under GILTI. Here is a practical takeaway. Asset-intensive CFCs will see the biggest impact because QBI disappears. The higher foreign tax credit percentage helps, but not enough to offset the smaller reduction and the loss of QBI. For planning, modeling, and ADIT exam purpose, the key is understanding how the same income produces different U.S. tax outcomes before and after 2026. This is a structural shift, not just a rate change. If you want deeper examples, full formulas, and exam-ready explanations, they're all in my blueprint notes. I'll give you a link in the description. This video is your high-level map. The notes walks you through every detail step by step. Thanks for watching.